Hey guys, this is Dr. Paget, and what I'm going to go through is I'm going to actually go through your financial plan and then show you on the actual Excel spreadsheets where you find information and where to put the information, and just make sure that the Word document and the Excel document match up, because that's the biggest problem that people have had. So hopefully this will clear up any issues that people have. So starting out, if you look at the sales forecast, first you're going to talk about looking at your payroll and how much you're paying your employees. So if you look at that, where I pulled that number from is if you go over to operating expenses on your Excel spreadsheet, and I just put selling salaries and wages for managers and non-managers all together. And so if you put in how much people would make a month, that's where I got the 88,000. So what I did is assistant manager's salary and then the floor supervisor's salary, and then added in the 6 sales personnel. And so what I did to figure this number out to get the 7,400 a month, or the 88,000. So I just added up their two salaries. And then after that, what I figured is how much I thought on a monthly basis you would pay your part-time sales associates. And so that's where I came up with the 7,400. And then you would just get the total for the end of the year. And so that's where I came up with the 88,000 per year. And then I just mentioned that the owner is not going to take a salary. So tell me, if they're not going to take a salary, when are they going to start? So I was real specific and said that until the break-even point is reached, they will not take a salary, and then they're going to take a draw of $2,000 each month. Next important thing was you talked about you would have $400 to cover expenses, and this was a hidden cost. So where you put the hidden cost in your Excel spreadsheet is under operating expenses. You put it under hidden cost, and you'll have 400 for each month. And then next, when you calculate your sales forecast, this is all just an estimate, but you should at least be able to draw 2016 from your planned sales. Is you would add up your your planned sales for apparel. If you add those two together, it's 396,000. Then you would add together your equipment sales were 54 and 44,000, which got us the 98,000. Then we added together accessory sales of 44 and 35 together, and that gave us 79. And then you add together your media sales of 12 and 10,000, and that gave us the 22,000. So then that gives you a total, which should also match the total if you come down here. If you added these two together of 296 and 299, you get your 595, and that would be your total sales for the year of 2016. And then from there, you would just plan to increase sales and come up with those numbers. So next is your cash requirements. So your average inventory, this should actually, you don't have to make that number up. You can actually pull it from your 6-month merchandising plan. And so if you're at the top of the sheet, you'll scroll down until you get to the last column, or not column, but row section, and then scroll over, and then it gives you your average inventory at cost, and that's what you put in here. It's for your average inventory. And then also, just so you know how you figure your beginning of the month stock, how you go about doing this is go back over here and look at your startup cost and look at what you put in for your initial inventory. So our opening stock was going to be 55,000. And so that would be the cost of it. So that's not at retail. So what we would do for our planned sales, we know it's 55,000. in our plan, if you go to the 6-month plan, there is your cost of goods sold. So cost of goods sold was at 45%. So that's, if you take that and you say, okay, 45%, 4.5 out of 10, 4.5 times what gets you to 10. So for that, if you did 45%, then it would be 2.25% that would get you to 10. So then what you would do is you would take so your apparel makes up 78% of your sales. So what you would do to figure this is you would take your 55,000 and then you're going to times it by the 2.225, and that'll give you $122,375. So that's how much your inventory is at retail. And then if you divide or times that, times 0.78, that gives you the number that you'd fill in for your beginning of the month stock. So that would come up to $95,453 would be your beginning of the month stock. And then you do the same thing for each of your other classifications, and that'll help you figure out your beginning of the month stock. And then the only other thing you fill in here is you're going to fill in the planned purchases. And so with the planned purchases, the thing that you're trying to do is to keep your sales to stock ratio close to a 1. So here, originally I had like 3,000, but watch what happens when I do that. So when I do that, that upped that to 1.2. But if I leave it at 0, it drops it down to 1.09. So I just played with all of these numbers, trying to keep, as you can see, keep all of the ratios close to a 1. And that's where I kind of came up with the numbers for that. And then at the end of that, it'll give your average inventory at cost. So you'll have that. And it may say average inventory at retail. Either way, you can do it that way. And then from there, so that gives us through our inventory. Then if you look at your taxes and license, so this number that you set aside for that should come from your startup costs. So if you come over here and look at your startup costs, this would be your legal filings. There's no sales tax permit in Texas. You don't have to add that, but it would be your legal filings. And so I had put in $315. So that's what you would want to put there. Whatever you put in as your legal filings. Next, you would want to say, you're going to say how much cash you're going to have on hand in a savings account, and that's totally up to you how much you want to have. I would at least have close to 10,000. Next is leaseholder improvements. Same thing. This should come off of the startup. If you go down to the bottom, there's leaseholder improvements. And all of these numbers for your startup cost, you should have found those by looking at the example and then looking at the examples that I gave you under chapter 11 of there was different articles that talked about starting up a business and the starting cost of starting a business, and just basing off of those you could kind of estimate what you think your cost would be. And so that's where I came up with the number for the leaseholder improvements. Then on your loan that you're requesting, you want to make sure that in your startup cost you put that loan for loan proceedings. And then you're also going to go over, I think it's equity and loan. No, it's the next one. And then under the amortization schedule is where you would put the percentage. And it has it, the percentage that will be at 5% for, and then you put in the 84 months for the term of the loan. And then all of these numbers that you list, your security deposit, professional fees, all of that comes directly off your startup cost sheet. So just make sure that all these startup costs match up with this. Then looking at your revolving line of credit, that also needs to be in the Excel spreadsheet. And that one's under equity and a loan amortization. Oh, and see, I just saw that I had 4%, so it's off. So we need to change this. You need to make sure your percentage is correct. And then you also need to make sure that you have the existing line of credit correct. And then if you're taking a draw, you would want to put that there. So I said I was going to take a draw of $2,000 a month, but it wasn't until the company broke even, which will probably take a year. So you wouldn't have to put anything in. But if you were going to take a draw, you would want to put that there. And then next, you would look at advertising. And so for your advertising, this is also going to be what you estimated in operating expenses on that sheet. So at the top was advertising, and you should have put in how much you plan to spend each month, and then it gives you the total at the end. So that's where I got the $12,000. Next, for accounting and legal fees. So next, looking at accounting and legal, so where you would pull this from is also your operating expenses, and this is under your professional fees. And so the total is $9,432, and it's allotted $786 a month for these services. Next is your insurance. So this will also be listed on your operating expenses. You'll go up to insurance and go across. And so total for insurance was $4,452. So that's where insurance came from. And then break-even analysis also is coming from the last sheet, which is your ratio analysis on Excel. And so you want to take that number and make sure it matches the number in your Word document, and that's where you pull that from. You also then are going to list, so all you're going to do from there is come over, you're going to start with your monthly cash flow sheet, and you're going to copy this and paste it into Word. When you paste it into Word, you want to make sure you use the format that gets it all on one page, even if it's smaller. And then you're going to put in, so here, I'll show you how to do it, because I'll do the second one. I'll do the year-end income statement. So all you're going to do is copy it, and then to paste it in, here, let's move this down. So to put this in, you're going to do paste. I want to say it's this one. Yeah, the picture you one, and that'll put it in correctly so you can see everything. And then you can always try to, if you want to try to fit it all on one page, you can always drop it down a little to get it to fit. And then you would put your end balance sheet on there, and then your ratio analysis on there. So that would be all of your main forms that you're going to go through to list on the Word document and where all of this information was pulled from your Word document. So hopefully this will help you with your final write-up. Have a great day.